How Zynga is trading today. Doug Creutz, analyst for Cowen and Company, has a neutral rating on that stock, and he joins me now, also from our San Francisco bureau. Mr. Creutz, welcome to Bottom Line. Thanks for coming on today.
Thank you.
Sir, Zynga's $10 per share price was at the top of the expected range, but as we mentioned, the stock got a lukewarm reception in its public debut today. What happened?
I'm a little surprised. Having it priced at the upper end of the range, I would have thought that they would have priced it where it could get at least a little bit of a pop today. It didn't pan out. Maybe there were more buyers of the IPO who were looking for a quick profit and are trying to turn around. Ultimately, I would say this is just one day, and it doesn't necessarily say a lot about the company.
Yeah.
I think that we'll know more going forward about how the stock is going to trade.
Well, Zynga is the leader in Facebook gaming, but will it be able to grow fast enough to justify its stock price? You write that Zynga's market share has declined from 50% to 38% of daily active users.
Yeah, I think that's really the question here. The stock price has a lot of growth built into it, and if you look at the trends on Facebook, it's not just Zynga, but it's really the Facebook gaming industry as a whole. The users of Facebook games really haven't grown for about the last 6 or 7 quarters or so. So that industry appears to have matured. Now, Zynga is targeting growth in other areas like mobile gaming, but those are areas that already have some pretty well-funded and aggressive competitors in them. And I think Zynga is going to have a tougher time growing share there than they did in Facebook on the early days.
Well, Zynga is selling over 14% of its available shares. By comparison, when Groupon began trading in November, it sold about 5.5% of its available shares. Is this all about supply and demand?
I think it's some of that. I think, they targeted an amount of capital that they wanted to raise, which is $1 billion. And based on where the demand was, they had to sell a certain number of shares to hit that target. Obviously, the significant majority of the shares are still tied up with original investors and employees.
Right.
Which means the float is still going to be relatively tight until some of those shares come to market.
There have been a lot of high-profile tech IPOs this year, and next year there's Facebook, which is expected in the spring. But Kevin Plinus of Barini Associates put out a research note this week that says the buyers of shares at their opening trade in the public market have lost an average of 32%. What's the environment for IPOs headed into 2012?
Well, look, the market has generally been a tough market for several years, and I think it has been a difficult process for many of these companies to get out. It's interesting, the comment you made, tech IPOs, and I think, one of the things about Zynga that I would emphasize is that although there's a lot of technology around this company, this is really a content company. They make games. So, I think they're really more comparable to companies like Electronic Arts and Activision and even DreamWorks than they are to a company like Google or Facebook that owns an internet platform.
Doug Creutz, analyst for Cowen and Company, with a neutral rating on Zynga, which made its IPO today. He joins us from San Francisco. Mr. Creutz, thanks for your time today. We appreciate it.